Coin traders and internet computer fam, how we doing? Thanks for joining me for the show. Going to be looking at internet computer ICP on that ticker. And you might say, what kind of chart is that? This is actually the ICP Bitcoin pairing. And I do want to start off on this chart first, especially since Bitcoin has been kind of taking the lead right now in the overall crypto space. So do want to actually zoom in here and talk about the current levels. You can see that to the downside, we're looking at an all-time low, pretty much coming in at about 16, almost 1700 Satoshis. But if we actually look for the closes on a lot of these candles, we're showing closing support coming in at about 1743. So if we do take a look at the current candle, you can see that we're actually starting to break below that level, which isn't necessarily the best sign to defend, especially since we have been looking at more or less a falling triangle, since we have been setting lower highs on this move, conveniently or symbolically, also getting stuck up at this 12-period exponential moving average. As you can see, has been resistance, 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 with ICP unable to show signs of strength to allow the pairing price to get above this trend line here. So especially as Bitcoin does have kind of the dominant eye right now in this space, then I would actually expect a little bit more slippage to the downside for this type of chart. Now, this doesn't necessarily mean that the dollar pairing is going to drop, but what this means is that the price of Bitcoin is actually rallying faster than what we're seeing right now out of internet computer. So typically what we do have happen is after strong rallies for Bitcoin, we need to see consolidation, which is when typically altcoins do rally. And that's what actually makes this pairing rally as well, because that's what this does track, is comparing the price action relative to Bitcoin. So what's performing better? And right now, Bitcoin is performing a lot better than what we are seeing out of internet computer right now. So yeah, I'm not necessarily seeing the greatest things and the greatest signs of strength for the ICP Bitcoin pairing here. But with that, let's actually go ahead and flip over to the dollar pairing and actually look at price performance for the dollar pair. So right now we're looking at a price point of 521, which, zooming in right now, do want to point out this tightening range after such a big pullback. So you can see that obviously looking at the big pullback that we had since breaking $8, pulling it back, setting our low, which actually was low, a lower low compared to where we found our initial support before finding that $8 price target. So overall, huge pullback. You can see there's only a small handful of green bullish candles here in this otherwise big bearish pullback. So finding our low, set a very lower high, pulling back, higher low, lower high, higher low. So this overall tightening range pattern has started now to break out bullish. And although we have actually topped out our previous level, which is about 530, when we did have our high come in right now for the current candle that closed at 538.7, nonetheless, we still retraced pretty significantly below this exponential moving average. So that's going to be a big sign to show a lot of strength, seeing how we can break the previous price high of this move, which was the lower high compared to the bounce. And so that's really going to be one of the big keys and indication of a strength upside move, is being able to break above this 50-period exponential moving average, and then also maintain 530 as that level of support as we do start to flip these exponential moving averages into a bullish formation. Now, typically after such a strong pullback, we don't necessarily, especially with the tightening range, happen. And let's go ahead and pull up a Fibonacci to kind of demonstrate this a little bit better, because if we look at the price action and the price moves, then you can see even on this first bounce attempt where we essentially got stuck up at these exponential moving averages, we still weren't able to see a price break above the 38.2% retracement, which currently right now is just under the $6 psychological at about 595.7. So typically, if you can't see a bounce where price gets above this move, we know that that's a pretty strong sign and signal that more downside continuation is going to happen. But that's one of the things that right now is so key, is that the current chart setup is kind of defining a lot of those normal rules that we look at. And a lot of that is just due to the strength of Bitcoin right now and its impact on the overall crypto space. So now we are flipping over into the weekly chart for internet computer, just mostly to talk about the trends right now with regard to the exponential moving average. Now, with such huge pullbacks, you can see how a wide gap formed between the 12 and 26 period exponential moving averages. And then how even on the weekly, we saw a lot of resistance points and prices staying mostly below this 12-period exponential moving average as prices did slip down to their bottoms. But when we actually did see our bullish break above this exponential moving average level, we actually did have a nice point of support on the weekly, having a price bounce off before breaking the 26 as well. But unfortunately, ultimate immediate slippage broke through both of these strong levels that were supposed to be support, especially since they were strong resistance on the initial move. So since we saw slippage of both of these now, despite getting close and tight together, we're actually getting a very strong resistance on this 12-period EMA. So that's going to be one of the big signs that we actually look for when we're talking about this internet computer chart. So if we actually are able to see the bulls rally up and see a weekly close above this 12-period exponential moving average, that's going to be kind of one of the big indications like we saw back on the start of January that leads to a little bit more of that upside growth. But until that happens, then pretty much we can be sure that this is going to be a pretty relevant resistance zone. And likely, I'm not necessarily expecting a lot of prices to go too much higher than that. And so let's even look at a big resistance point is right at 550 as well. So you can see that if we zoom out a little bit, big point of support, resistance, closing support for the weekly, and then closing resistance after the bulls failed to defend that level. So we are going to have a big upside resistance both in between the 12 and 26, but then also on that 550 resistance point as well. So if we do get a lot of bullish strength, it's going to need to completely smash through all of these levels and basically have happen what we saw at the start of the year all the way through February when we had our move up to $8. Honestly, I was expecting a little bit more defense from the bulls after hitting the $8 level, rather than just slipping almost all the way down to about the 450 line. And so because it was such an undefended level, it is now relevant as that big resistance point once again. But the kind of bullish thing that we are seeing on this chart is just the kind of gap between these 12 and 26 periods closing, which essentially is confirming longer stabilization and kind of a price floor bottoming out, which obviously one of the biggest critiques of internet computer is an awful price chart coming right off the launch when we did dump. But like we said, the fact that now we are starting to actually close out and see a longer term stabilization on a floor for price does turn into a great sign for longer term growth, especially when we do see these exponential moving averages getting super close together. It's going to be pretty easy for them to actually flip bullish when we do get a little bit more upside action out of the ICP chart. So even though zooming in, it doesn't necessarily look that great, when we do zoom out, you can see that it's actually not necessarily that bad of a setup, especially for a little bit more of the longer term, since we have been defending these lows and we're actually establishing a longer accumulation point for this bottom and stabilizing a longer term price floor. So although on the daily chart, there's a lot of uncertainty, and even on the weekly too, since we can't get above the 12, but when we do zoom out and look at the overall pattern, I wouldn't necessarily expect any type of major massive moves that would be anything comparable to what we've seen thus far. Now, flipping over to the 12-hour, we've talked about exponential moving averages, but we also want to talk about a relevant trend line that has broken now. And so this is kind of another reason why we do like focusing on relevant trend lines, especially when there has been multiple tests of those trend lines. So you can see multiple attempts on the initial connection points, and then we had another big resistance point, big resistance, and then right on this move, had a big resistance point, but instead of rejecting, actually found that nice bullish candle to the upside to break out. So even now, even with a potential back test, that's still a good sign. And like we said, we have broken to a new higher high on some of the shorter term trends as well. So if we can, for example, maintain the current setup on this 12-hour, then we could look at a completely bullish formation on these exponential moving averages, which should be able to provide enough support as well as breaking the previous trend high at 530 to then hopefully continue and carry on to see the next resistance point, which is going to be a pretty significant zone from about 550 up until about 575. So if bulls can't maintain defense on top of about 510 and especially down above the $5 psychological, then pretty much I am going to expect a lot more tests and an expectation that we're probably going to see some of the support floors get tested again down to about 480. And then next support down below that would be about 460. Finally down to our lower support floor at about 450. Plenty of nice stair-stepping support lines though, so I think overall we should be looking a little bit better and likelihood should be a little bit more in the bulls' favor, despite being the fact that the initial move coming into this consolidation was a bearish to the downside. So yeah, definitely let me know your thoughts, predictions, and everything down below in the comments section. I do love getting back to each and every one of you and engaging with you down in the comments section. But with that, that actually is going to go ahead and wrap up our show for today. If you did enjoy, please hit the thumbs up, like, and subscribe. As always, do appreciate the continued love and support. It does mean so much. Stay safe. Take care, everyone, though, and I will catch you back in the next video.